Back, we're live at Digital Week Online, and we have a great panel right now on a topic that's near and dear to my heart. It is the CBDC Forum, and I really don't like this panel because I don't need to run it. I get to hand it off to Xiaoshen Zhang. Hopefully I'm saying that correctly. FinTech for Good. I'm just, you know what? This is where I hand over the reins and have a wonderful panel, and I'll be back with you. I'm gonna be watching, so go for it.
Thank you very much, Gordon. I really appreciate it. And hello, everyone. My name is Xiaoshen Zhang, the president of FinTech for Good. And we, in the past few months, we have done quite a number of work around the CBDC, central bank digital currency. And I'm very glad that we co-organized this session together with the Digital Week Online. And I have participated in a few sessions. It was awesome. And I'm very happy that you are here with us. And so just some background, on September 8th, we launched the first CBDC forum. And then also during that time, we convert our CBDC working group into CBDC committee. And so for the committee that we are doing a number of things. The first one is, the CBDC forum. That's through this forum, we bring different stakeholders together, try to identify the research topic, and also highlight the latest development, and also bring experts together to brainstorm different pieces within CBDC. And we all know that CBDC is very powerful, and also it has potential to impact every aspect of our life, of our governments, and also impact our business as well. And as CBDC, it's the early stage, and we do know that there's quite a few capacity gap within the CBDC if we take it as an industry. And there's a awareness gap, then there's also capacity gap, there's also the technology gap. And hopefully that's by bringing different experts together and sharing the experience, sharing knowledge, we can really just bring some of the gaps in the next few months. And then we'll have quite several initiatives. And one is the learning board, and we bring together the experts coming up with a learning framework, so then we can just provide the certification for CBDC talents. And we also are issue CBDC awards, and where we feature highlights the CBDC related innovation and initiatives. And we bring together a CBDC experts roster, so then different countries can access to experts, especially developing countries. If they don't have the capacity, they can access to the global experts for CBDC related knowledge, and also project development related activities. And lastly, we also have the CBDC Tech Global Pitch. And for the global pitch, we try to identify CBDC innovation, and through the pitch that we can bring the innovation to the investor to help them to just move to the next stage. And on November the 11th, November the 17th, that we are going to organize the third CBDC forum. This one is the second CBDC forum. During the third CBDC forum, we'll have one whole day event. The first half the day that we're doing the CBDC panel discussion with focus on country-specific studies. And then the last part of the forum will be the CBDC Academy, where that will pilot one of our CBDC course. That's the introductory course. We offer 15 scholarship for developing country participants, mostly from the government, and then the rest 15 participants will come from different countries, and we will curate this 30 people group and then to take our CBDC course. Hopefully this will bring some capacity related development into the market. And without further ado, I'd like to just introduce you to today's panel. And we have very strong panel and who have very exciting background. And the format is as such. And each panel member will just have 5 to 7 minutes presentation. Then we'll follow with a discussion. And without further ado, I'd like to just introduce Thomas, who is the CTO of eCurrency. And Thomas, the floor is yours.
Thank you, Xiaochan. Hello, everybody. It's a pleasure to join you for this event. My name is Thomas Kudrycki. I'm a co-founder and chief technology officer of eCurrency. We established eCurrency a few years ago. And allow me, Xiaochan, to share my screen.
Yeah.
Thank you. And we started this company quite a few years ago, even before the current...
Sorry, Thomas, we cannot see your screen yet.
Oh, sorry about that. Here it is.
Okay, yeah.
Thank you. So we established the company a few years ago, and even before the current momentum behind CBDC was even thought about or extant. And a few years before even the terminology surrounding CBDC was developed to the extent that it is today. So quick disclaimer, I'm here today on my own behalf, not on behalf of eCurrency. But of course, the views expressed here will probably parallel those of eCurrency. So what is the CBDC we're speaking of? Well, as we started the company, we asked that question ourselves. And in order to answer that question, we have gone to the client, to the actual central banks to establish an answer. So what makes a digital asset a central bank digital currency? Well, by definition, it has to be a liability of the central bank, legally equivalent to base money, part of M0. It must be centrally controlled, therefore, by the central bank because it is their currency, and initially must be distributed by the central bank from the printed stock, if you would, in exchange for other assets, obviously. However, from then on, it must flow through private financial systems. Central banks should not be constrained by the technicalities of CBDC into having to operate it. That opens up the whole ecosystem that enables eCurrency to be true, the CBDC to be truly adopted. It needs to be peer-to-peer, both offline and online. So we hear more and more about offline capabilities, especially as part of resiliency that came from, I think, ECB just very recently. And then it has to have the best possible security, also upgradable security. The reason for that, of course, is that there's always a race between the security features of something as secure as, say, banknotes or digital currency and the potential forgers out there. It needs to be scalable to tens of thousands of transactions per second to enable unimpeded operation across the entire economy of even a large economy. It must offer instant and final settlement because it is the cash, it is the base money, it is the least risky form of money. And once it changes hands, there are no next steps to be taken. There is no 15 steps of settlement behind the scenes. And finally, something that is not really part of cash in a physical form, but it must be programmable to some degree, certainly around privacy. I'll come back to that briefly. So these are the requirements. What did we do with that? Well, we said, okay, we took a very traditional approach. Let's figure out the requirements. Let's build a product, if we can, to fulfill those requirements. So first of all, and that is a fundamental point, we decoupled the instrument from the container in which it exists. That effectively becomes now a bearer instrument. We then centralized the issuance, built a system that actually can issue create the security surrounding the currency, and then issue or print in a digital form the currency. And then the first tier of distribution that comes from the central bank into commercial entities, typically the first tier commercial banks. This is how central banks are used to operate, right? And therefore we modeled our system on that. Subsequent distribution goes through multiple tiers. We keep hearing about 1 tier, 2 tier. In reality, this is a multiple tier distribution. There are commercial banks, there are potentially a lower tier commercial banks, and then individual financial institutions, individuals such as myself with my wallet. And then, of course, direct P2P transfers, be it government to people, the other way around, P2P, business to consumer, all that must be taken into account. You see here effectively that hierarchical structure. There are multiple layers to it, but this is a simplified view of it. And all of it exposes an API, in our case, to which existing financial institutions can hook up. The second set of requirements that I mentioned was security and scalability. The most security possible assured by offline issuance. Offline for security professionals during this attending this webinar, it's called a air-gapped system. It effectively is a system with no connectivity to anything else. You extract artifacts from it via other means, highly secure means. Cryptographic material resides on hardware security modules exclusively. That's how we achieve this security. Those hardware security modules, by the way, can come in all kinds of shapes and sizes. They can be servers, big, powerful servers. They can also be chipped cards that I can put in my wallet, or perhaps secure enclave on a phone in my pocket. It's then distributed across all those cache boxes, flows from one to one. We use future-proof, quantum-resistant cryptography. Quantum computing is coming, and a lot of issues with private public key infrastructure will manifest themselves as a result of it. And then we can scale this in multiple directions by just adding those cache boxes to the environment. So security, scalability, that was the second set of those requirements from the central banks. Finally, the last set of it is instant settlement and programmable privacy. So keep again in mind that individual CBDC objects represent value and they are decoupled from the container in which they reside. They can be deposited into wallets, again, on the cards, on the phone, on the server, but in and of themselves, they themselves represent value. So once you shave off a piece of that object and send it across, the actual value changes hands. It is not an instruction to execute a payment. It is the actual instrument that is the payment. The flow is mediated by existing communication networks, be it online, namely wide area network, meaning the widest possible area network being the internet, at least today. I think Bronson and others are thinking about galactic internet, but maybe that's a little far off for now. But it can also flow through short range communications, be it some near field or Bluetooth or similar way of doing it. Doesn't matter. And then the tokens and the cache boxes can be programmed with privacy rules and perhaps other rules. It again does not matter that much. The money is programmable. So that's how we built it. That's how we built it based on the requirements. Starting from the requirements, it is fully built out as a product. It operates both commercially as well as participates in proof of concept and pilots today. I thank you for this and looking forward to our discussion. Feel free to reach out to me anytime to continue or contradict me, which is also quite possible. This is our perspective. Thank you so much.
Thank you, Tom. Really appreciate it. And I think, this is for anyone who is not in the CBDC industry or didn't hear about it before, I think this is a really a good starting point for you to get the concept and also, you know, the mechanism, how it works. Now let's move to Christine, and who is a global fellow at NYU, and she's also leading the CBDC project from Yale China Center. And Jiaying, floor is yours.
Thank you so much, Xiaochen, and thank you, Thomas. I learned a lot from your presentation. Well, in the next few minutes, I will focus on China's CBDC, known as Digital Currency Electronic Payment, DCEP, and cover three things: where are we right now? Second, what are the key features of DCEP? And third, why China want to issue DCEP? First, where are we? Oh, sorry. I don't have a slide to share, so let me just speak like this. First, where we are. China is one of the pioneers in exploring CBDC. It started research in 2014 and formally established a digital currency research institute in 2017. But I would say great progress was made over the past 2 years. In November 2019, PBOC confirmed that the major work of DCEP, such as the high-level design, standard setting, and internal testing had been completed. And earlier this year, in April, China launched trials of DCEP in 4 major cities. And in May, the PBOC, which is People's Bank of China, which is China's central bank, was in talks with a few private companies to expand its test. Major firms such as Didi Chuxing, which is Chinese Uber, and some food delivery giant like Meituan Dianping are among the candidates to roll out DCEP on a larger scale. On October 12th, which is this past Monday, China PBOC, in collaboration with Shenzhen government, issued 10 million yuan, digital yuan, to 5 million citizens in Shenzhen. Those who receive DCEP can use it now at 3,389 local stores in Shenzhen. I would like to share with you how China's DCEP look like. Let me see how I can share my screen. Do you want to? All right. So the first one, if you won the lottery, you will receive an email receive a text message from Shenzhen government and give you a link to download the digital wallet. And this is a picture of the link, and then download the digital wallet. And this is how DCEP look like at this moment. Yeah, just happy to show you the first look of DCEP. Just stop sharing. Oh, all right. In 2020, China plans to use DCEP at the Winter Olympic, and which will be hosted in Beijing. That's where we are right now. What are the key features of DCEP? First, DCEP is designed to replace MO, cash in circulation. DCEP is digitalized RMB, a fiat issued by the central bank with a centralized management. So it's fundamentally different from cryptocurrencies, which is private money and has a decentralized governance system. Second, Chinese DCEP, the design is a two-tier operational system for issuance and redemption of DCEP. The distribution of the model will follow the traditional fiat distribution model. The PBOC will first issue and redeem DCEP to commercial banks, and then commercial banks will distribute DCEP to the general public. Other financial institutions, probably at this moment we are not that clear, but probably will be partners to circulate DCEP. And third, to make DCEP function more like cash, the PBOC inventing a system called loosely coupled account. In Chinese, we say 账户松耦合. It's a very technical term. It means that transaction can happen between two digital wallets, and it can happen offline. Digital wallet do not need to bound to a bank account. You will only need a smartphone and a phone number, but the transaction limit could apply. Third, why China wants to issue DCEP? There are internal needs and external forces. Let me focus on the internal needs first. First, issuing DCEP is a response to decreasing demand for cash. Since 2000, the amount of currency issuance has risen from 30 trillion yuan to 182 trillion. But the proportion of cash in circulation has been decreasing year by year. China moved rapidly toward a cashless economy. In 2019, with 851 million smartphone owners, 86% of the population in China right now use mobile payment to make purchases. Therefore, having a digital currency perfectly fit into the transformation of a cashless economy. However, the mobile payment market was dominated by two private companies, I think many of you have heard, which is Alibaba and Tencent. These two companies dominate 94% of the market share in the payment market, and giving the two an effective duopoly over trillions of dollars in mobile payments. While their dominance creates systematic risks, this is the second reason that China wants to issue DCEP, to respond to the potential financial risks posed by Ali and Tencent. Well, there are a few more other reasons that are more, I would say, more general, similar to many other countries. China wants to use DCEP to address financial governance challenges such as money laundering, tax evasion, or tax avoidance. Use these DCEP to reduce some operational or transaction costs, and use it to enable direct government financial aid to the poor people. There are some also external forces such as Libra or dealing with potential economic sanctions. I think I'm running out of my time. I'll be happy to just explain some other external forces during Q&A or discussion. Thank you. And Xiaochen, over to you.
Thank you, Christine. And yeah, it's really interesting. You know, we started from Tom's introduction with the technologies, and then now we have a very practical example, one of the world's first practical example. And now let's move to Latin America, and Ra, and the floor is yours.
Thank you very much, Xiaochen, and thanks for having me here in this great panel. I'll try to share my screen, and at the outset, let me say that all the views that I will present today are only mine and do not represent none from SEMLA nor from its central bank members. We are based in Mexico City, and the topic of CBDC is one of the key areas of development within Latin American and Caribbean central banks. Perhaps many of you have heard about the CBDC projects in Bahamas, the Eastern Caribbean Central Bank, Uruguay, and Ecuador. So we are diving in these projects to learn and share those practical experience within the community of central banks. So my remark, we will try to focus on a report that will be released by October 23rd. And initially, the group has worked toward identifying which are the main issues a central bank should address before engaging in a retail CBDC project. Happily, we are witnessing, all of us are witnessing an increasing interest from all the industry to have ready digital means for money. And this is perhaps one of the most significant changes that we would like to underline in this report. This is the second edition of the report. The first one is already available in our website, in SEMLA's website. It's freely available, so you can have a look on that. So that's just to start. And then moving to the antecedents of this working group, it was established in 2018. as per the mandate of the Board of Governors of Latin American and Caribbean Central Banks. We initially were focusing on the conceptual and theoretical issues of CBDC, including all the money flower by the BIS and related aspects about money and payment systems. By that time, it was very limited the experience in retail CBDC. Perhaps Sweden was one of the pioneers, as well as Ecuador. But after 2 years, the things are totally different. And as Xiaoshen mentioned in an email, this is exciting time. We are really moving fast, and CBDC looks like a stock market. Every day you wake up, news are totally different. You heard about new central banks starting expressions of interest, projects in Sandbox, all about retail CBDC. So what we're doing now with this report is trying to better understand the practical experience on designing a CBDC, no matter the technology, how is to put in place such a project, and what are the main challenges when implementing the retail CBDC. This is just one of the many figures or attempts to try to have a concept of what is a retail CBDC. You have the BIS, the Bank of England, the Fed, the Federal Reserve Board, the IMF. All of us are trying to map what retail CBDC entails. In our view, this is basically based on this two-tier structure that Christine mentioned earlier, and it has to do with money and payments. And on the side of money, we have at least 3 issues that retail CBDC should have in mind when central banks decide to go further. First is it should be legal tender. We have seen many initiatives like M-Pesa that are based on commercial bank money. This is totally different. Retail CBDC need to be underpinned or backstopped by a central bank, and that implies having fiat money. Second, it should be like cash or any other payment instrument that's basically serving as a medium of exchange. And finally, what we are watching in every single project around the world is that retail CBDC is not envisioned as a full substitute of cash. This is very, very important, because on one hand, you need to have the rails for many, especially in emerging economies, to have cash available, people cashing out, making all the small transactions that are not feasible given the institutional framework, given the geography and other idiosyncratic issues that are found in mostly in emerging economies. And on the other side, we have the payment systems. What happened with retail CBDC? On the contrary of cash, you need an infrastructure that helps you to process the transactions and CBDC. And we are watching that technology is also one of the main topics under discussion. But besides that, and I think this has been mentioned earlier, interoperability and the ecosystem that need to be created is fully important. So under this framework, what we are trying to share in the report that you will be able to look in the website of SEMBLA is some of the lessons that these 3 projects, the Bahamas, the Eastern Caribbean, and Uruguay, have shed in the last few months. I will try to go really fast on this. First, we need to understand what are the habits of the population in terms of using payment instruments like cash. Second, you need to establish really high technological and operational requirements. Sometimes you can use DLT, sometimes you can use conventional technology, but no matter what, you need to ensure that the technology and the architecture is really resilient. And for that, you have the principles for financial market infrastructure that the CPMI and IOSCO issued like 8 years ago, and follow an interoperable ecosystem with the private sector. This is not a single issue for central banks. They don't have the commercial expertise, they don't have the physical infrastructure, and they need to cooperate with the private payment service providers to make really operable the CBDC in a domestic manner. I'm not talking about cross-border, but at least in the domestic manner, you need to talk to your industry, local industry. And second, there are two levels of collaboration with the private sector. On the one hand, at the corporation level, you need to establish standards, interoperable rules, and an infrastructure, perhaps a public infrastructure that allows further competition at the front end. And this is really, really important. And finally, the COVID-19 pandemic has shown that there is the need to address many of the new and existing social and economic needs by the people that is mostly unbanked. I hope that you find this useful, and I'm really looking forward to have available this report. Please, if you have any time, go to our website and discover what we have to contribute to the community. Thank you, Xiaosheng.
Thank you very much, Raul. And again, and I think this is amazing. And so while many countries are studying, whether or not they should just launch a CBDC, and then we have, the early lesson learned for CBDC implementation. So I think that is, again, very helpful, because many of the central banks are more conservative. The reason is very simple. You are dealing with the whole monetary system of the country, so you need to be conservative. But you need to definitely using backcasting, approach, looking at the risk and benefits, after it's implemented, and then you come back to make the decision, whether it's feasible, and whether we have the resources, and whether we have the capacity to deliver. So I think this lesson learned is extremely important. Now I'd like to invite Linda to just continue the conversation. I think this is very nicely linked with the earlier three conversation, and as when central bank make decision, they need tools, and not like the traditional financial market. There are so many tools available for central bank and also for capital market. But now in CBDC, definitely the tool is important for them to understand and analyze and then make decisions. So then Linda and the FinTech for Good team, work together to develop a report, and this is one of the two. It's a risk and benefit analysis tool. And Linda, the floor is yours.
Hi, hello everyone. Hello.
Yes, yeah, we can hear you.
Oh, great. Okay. So in the next few minutes, I'm going to brief the major findings from our CBDC white paper. Let me first share my screen. Xiaoshen, there's some technical issues, so I don't know why I couldn't share my screen right now. But okay.
Then just to go ahead to just go over the slides, what you have from your end, and
Okay, great. So everyone, sorry I couldn't share the screen right now, unfortunately. So first of all, in the report, we examined the definition and the features of CBDC. In particular, we established a risk and benefit framework. Based on this framework, we also assert some important considerations for the central bank to design and to implement the CBDC. The proposed CBDC is expected to have the major features, which the previous speakers have already stated. So I'm not going to repeat here, but based on the features like interest-bearing, accessibility, direct or indirect distributed by central bank, anonymous or non-anonymous confidentiality and availability, and also it's the liability of the central bank. Based on these features, we set up 8 scenarios. And in the report, the analysis are based on those scenarios. The second part is on the risk framework. So we have the first risk is the monetary policy and financial market risk. It mainly concerns the risk from the policy and market level that may change the financial environment. In terms of the monetary policy specifically, bringing interest rates of CBDC below zero may lead to massive shifts into cash during the recession, and thus CBDC is not an effective instrument for its potential to remove the effective lower bound of interest rates. And in terms of the financial markets, CBDC is similar to bank deposits if it's interest-bearing, non-anonymous, and on-demand convertible. To compete with CBDC, banks have to offer interest rate premium to attract clients, resulting in retaining more risk seekers and increase the volatility. The second risk is the supervision risk. We have the one of the major issues is the financial integrity risk. The anonymity feature may incur fraud activities and financial crimes. Another supervision risk is tax evasion risk. Because less traceable CBDC brings the anonymity and it's more difficult for the tax agents to trace the tax evasion behaviors. The third risk is the operation risk. So here we have 2 aspects. The first one is issuance and circulation risk. And the second is the management risk, which includes the setup costs for issuing and monitoring CBDC, and also the cyber attack and power outages may bring challenges to the operation of CBDC. The last risk is the implementation risk. So here we have access barriers risk and awareness risk. Because of the limitation of time, I'm not going to into too many details. The third major part of the report is on the benefit framework. We provide the because we are going to provide the rationale of CBDC as a new instruments that could conduct monetary policy more effectively if CBDC is interest-bearing and central banks have the direct access to the private and public accounts. So the second benefit of the CBDC is that the supervision benefit, because if CBDC allows for trace tracking, the regulatory bodies could apply CBDC to improve its anti-money laundering and counter-terrorism financing. The third benefit is issuance and circulation benefits, because issuing the CBDC could potentially reduce the transaction costs and the maintenance costs of the entire financial system, and the real-time data could also help monitor abnormal transactions and prevent from financial crimes. Last but not least, for the benefit framework is implementation benefit, which includes 3 parts: financial innovation benefit, financial inclusion benefit, and governance benefit. And here, moving to the last part of our report is the key considerations of designs. So we have based on the risk and benefit framework, there are some key considerations that the central bank need to consider to adjust upfront when designing the framework and assessing the validity of CBDC. But of course, the specific designs will vary owing to different policies and priorities of different countries. The first key consideration is for the countries to assess interest rate on the CBDC and its related measures. There are both pros and cons of interest-bearing and non-interest-bearing CBDC. And the second point is to adjust the degree of anonymity and facilitate the technological progress. Central bank may consider to adjust the degree of anonymity based on specific policy goals and different developmental stages. The last consideration is to adjust operational support from legal, policy, and infrastructure perspectives. Fundamentally, the central bank needs to consider potential legal concerns associated with the CBDC insurance operational and implementation process. On top of the legal regulations, so setting up some standards has very important policy implications. And that's all for today. Thank you very much.
Thank you, Linda. And yeah, so for the policy recommendation part, that I don't have the slide. So then from the other part that I showed slide on your behalf, and so it's a report with around I think 40 some pages, and it's not easy to just summarize everything in like 5 minutes. So thank you very much. And if anyone is interested, and we'll just have a separate discussion or a training on this, and we'll share the results with more time. So yeah, with that, and I think we concluded the first part of this forum. And now that I'd like to just start the second part, which is the Q&A part. And in this morning, that we already organized 2 other CBDC panels. The first one is around CBDC and DeFi and or decentralized finance. And we have a very exciting discussion there. And the second panel was around the CBDC research and development. Several common questions come to those discussions, I think also relevant to this conversation. And my first question to all the panelists is around the CBDC and the financial inclusion. So as there are many benefits for central bank to just take on CBDC. But I think for underbanked and unbanked, this is potentially extremely important and useful. And as we know that in many developing countries, and especially least developing country, there are a large number of population who are still left out of the financial system. And in your opinion, how can CBDC potentially address the inclusive finance challenge faced by many individuals in many parts of the world? We start from Tom.
Thanks, Xiaochen. From my perspective, I think the lack of inclusion in many parts of the world probably can be broken down, or the reasons for that lack of inclusion, into a few categories, right? The first one is lack of the infrastructure, right? You cannot have an ATM in every village, and you cannot have a bank account because you cannot afford it. So that's sort of the second level of it. The third one is, I would suggest, lack of trust in many instances, right? Lack of trust in the financial infrastructure of a particular country, or lack of trust in the ability of increasing the mobile operators, right, to hold on to your money with reasonable level of risk. So the pattern I'm seeing out there is that even with mobile money, it's really a remittance vehicle rather than a mobile money in the sense of paying for goods, right? It's something that you send to your family in the village. So to address that, I think CBDC is actually very well positioned to address that for a few reasons. First, you don't really need additional infrastructure. You already have a phone and you have the mobile operator, right? So you can use your existing tools without having to have an ATM or a bank branch or even a remote banking automated thing, right? That is becoming popular in places like India, for example. Secondly, the issue of risk. Now you have, to the extent that you trust your own central bank, and of course there are places that do not trust your own central bank, but that we cannot solve with CBDC one way or the other. To the extent that you trust your central bank, now you have that central bank's base money, the instrument in your pocket, in your electronic pocket, right? The same way you would carry cash. So you are included in the digital financial system as if you were carrying cash, but not doing it physically, if you would, right? And the last one is the another aspect of the infrastructure, and I actually want to perhaps do a little bit of a comment on Linda's presentation. I don't believe that there's a huge cost to CBDC that needs to be borne by the central bank. I think you mentioned new network. With the right approach, the network is already there, right? This is the mobile network, this is the phones. The central bank just needs to provide an instrument that is injected into those pipes. So that's my thoughts on this.
Thank you. Yeah, and I think your comment also linked to our discussion around the CBDC and DeFi. So if the trust issue cannot be addressed by CBDC,
Important. That's my point. Thank you.
Thank you. You brought a very important point. That is, any digital technology potential also create a digital divide, and those have and don't have naturally just don't have the similar kind of access. When you introduce a new technology, you also have to consider those who don't have. Although introducing CBDC, potentially you don't need ATM, you don't need a local bank in the rural or remote areas, but for those people who don't have a phone, or don't have access to a smart network, and how can you address those issues? And that has to be part of the rollout plan. So I think that's definitely a very important point. Rob?
Thank you, Xiaosheng. I have three gaps in mind to share with you. First, we are talking basically on the supply side of retail CBDC. However, the demand side still remains like 10 years ago. Financial literacy in many emerging and developing economies is perhaps one of the most challenging aspects for retail CBDC, for mobile money, or for whatever payment instrument to be used effectively. Obviously, the infrastructure is relevant. Second significant gap has to do with how we achieve a retail CBDC design that makes feel people that they are using cash, that there is no friction using cash. So this is, I think, also one of the following challenges for retail CBDC projects and pilots. And third, I believe I'm a strong believer that financial inclusion itself is a nice goal. However, there are people that like to have cash, and they can be self-excluded. This is something really relevant and once again, sorry for spotting too much on emerging economies, but there are people that like to be in the shadows. We have informal economies in Peru, in Mexico, Colombia, that surpasses 50% of the economic activity. What you can do with that? QR, perhaps, but these are the gaps that each central bank and the community, the financial industry, need to face looking forward.
Yeah, and I think again, this is like common sense. In Tom's word, that's probably the coming from the trust, and then from your perspective, that's may not be from trust. It's a willingness. It's just a preference. Prefer a different form rather than the form that's being. And that I think is also critical. That's to think that people have different preference, and how can you address that if you roll out a system which really impact their life. And you want inclusion, potentially you can also pose exclusion. So how can you address that when you have the design? And now Linda.
Yes, so I agree with what Tom just said. For the people in less developed countries, especially those groups who have limited access to the banks, but have cell phones, CBDC have provided the great opportunities to allow those people to connect to the financial systems without those too many challenges. But CBDC also allow people to engage with the governments or other organizations for them to implement the financial programs, such as providing the microfinance assistance. But in the other way around, CBDC does indeed require the government to provide stronger infrastructure help to set up the network internet, for example, the internet networks and mobile penetration rates to help to promote the CBDC, and it does require the governments and central banks to increase the governance capacity and coordination between the institutions. And also in those less developed countries, extending the internet and phone coverage and also lower the data fee in rural areas could be feasible options to promote the CBDC. Thank you.
Yes. Thank you, Lina. Yeah, definitely. And when we discuss the cost component, and we definitely also talked about leveraging the existing mobile network and also existing infrastructure, but we also just talk about the behavior change, and the awareness campaign and the capacity training, and to roll out the program from central bank to different stakeholders who will just from pilot to commercialization. There will be cost associated with that. So yeah, that is the first question, and we only have 6 minutes left, and I want to just have each one of you to quickly comment on the potential impact of CBDC to the current international monetary system. And this, come again in our conversation this morning, that currently we know that, from the Bretton Woods system, and there is existing, structure, and how potentially a CBDC related international monetary system to impact the existing system, and what will be the potential implication. And maybe each one of you have 1 minute, and start from Tom again.
Thanks, Xiaochen. Just 15 seconds reacting to perhaps a couple of previous remarks. We leveraging what Raul actually was talking about, CBDC cannot replace cash, right? So it's an add-on. So we are not, I don't think, advocating, any of us, a global en masse replacement of cash with CBDC, right? So anyway, with that, impact on the I'm not an expert. Sorry about that. I'm not an expert on monetary policy, but from where I stand, to the extent that CBDC is a portion of M0 within individual sovereign entity, I don't see a huge impact on a global financial system by introducing it. If we are talking about some issues that perhaps places like Bank of Canada and Bank of England raised in terms of bank runs on within a particular economy, that I don't think is a big issue either, in a sense that even today, actually quoting from Sveriges Riksbanken, even today I can take all my assets and convert them into government obligations of sorts at the push of a button on my phone, at least in this country and in Europe, right? So I don't want to minimize it, but I don't think the impact is as scary as we tend to think globally, just because we don't know the CBDC beast well enough yet.
Yeah, thank you. And now let's move to Jiaying.
Well, because I do Chinese case study, focus on DCEP, so I would like to disagree with a statement that I've been hearing for a while, which is CBDC would help RMB internationalization. What I would say, probably not, China has always had an intention to internationalize its currency, RMB, but the internationalization of a country's currency involves many aspects of value storage, medium of exchange, and unit of account. Digital currency, or DCEP, I would say it's an innovation in the area of payment, but does not cover all those aspects. We should also know that a country's currency becoming a international currency depends fundamentally on the country's economic, political, technological, military powers. A currency will not become an international currency just because it's digitalized or the form has been changed. I would say if China's DCP, or if China wants to internationalize its currency, there's still a lot of work to do. For example, China would need to open the market more, promote market-oriented reforms, or developed RMB offshore market, and welcome more foreign investments. In short, probably DCP will not help RMB internationalization, especially in a short period of time. But in the future, we don't know. We still need to see how DCP, or in general CBDC, will roll out in the future.
Yeah, I would love to have you to write an article, and then we can share with because demystify a lot of myths in this is also very important, and it'd be great to have an article from you. And Rob?
Yeah, I will have two opportunities for retail CBDC regarding international monetary system in mind. First, we have heard more and more about global stablecoin arrangements, Libra, USDC, and others. Perhaps retail CBDC would represent a counterbalance for such initiatives that unfortunately over time have shown that they lack from the institutional framework to be accepted by governments and by the financial industry worldwide. This is the first thing. Second thing, I think retail CBDC as a new financial architecture, it could help, for instance, to release some of the pain for countries that heavily depend on the role of international correspondent banking. So obviously, the way you connect the links between retail CBDC, different designs and operational frameworks is not as easy as telling it, but I think it's two of the most significant challenges regarding CBDC and the international monetary system we know so far.
Thank you, Ra. And Linda, quickly, and 1 minute.
Okay, so in my opinion, I think the introduction of CBDC enables the central bank to improve their accountability and efficiency to implement the monetary policies, especially during the recession times. So because as you may observe, during the pandemic time, the many central banks have introduced the lower interest rates or negative interest rates, and so those people would prefer to hold the zero interest cash, which will bring the so-called liquidity trap. But if the CBDC is implemented, it could help the central banks to implement the monetary policies, for example, QE, to bring additional stimulus and more effectively, because it's directly connecting the individuals and institutions without going through the third parties. And also CBDC will allow the central bank to maintain the price stability, because if the central bank would not have to consider a steady inflation rate, so the CBDC can help to mitigate the severity of the lower bounds of the so-called inflation buffer. Thank you.
Thank you, Linda, and thank you, everyone. And so this is the end of this session. And of course, the CBDC as a new topic, there will be a lot more to discuss. And we'll launch a number of regional CBDC forum, and you will just hear, case studies from Asia, from Latin America, from Africa, and also from North America. So that's, each continent can learn from each other. And on November 17th, and that will be our next global CBDC forum. And go to blockchainfrontier.org and welcome to join our next forum and continue the conversation. Thank you very much for the speaker of this session, and you are amazing. And I think many of us learned a lot from you, and we'll definitely will continue the conversation. And thank you again.
Good job, everyone. Very well done.